All right, let's get practicing in QuickBooks Online. Grab the link below so that you can follow along. All right, here we are in the QBO gym, and the QBO gym is really just a set of numerous exercises that help simulate real-life scenarios that you may encounter as a bookkeeper. Every month we come out with a new set of exercises. We have it broken down into 4 different categories, and then within each category are those exercises. So today we are going to be focusing in the cardio section for July. At the top here is a video that talks a little bit about what's going on that month in Craig's world. He's our fictitious business owner. Further down is an interactive quiz that relates to the video that you just saw. And then further down, we have all of our exercises in this section. So today we are going to be practicing making a loan payment. We are going to be working in the sample company. This is where we always work. If you're not sure how to get to it or how to get your own free QBOA account, just go ahead and click on the link below in the description. So our scenario today is that renting equipment is getting expensive. So Craig took out a small loan of $5,000 to buy his own. He tells you that he already entered it in QBO and that the monthly payment is $142.61. It just needs to be scheduled for the 20th of each month. So let's see how to do that. We need to first grab a copy of the loan statement, which you will need for this exercise. Go back to the QBO gym. And under the animated video, here is this link that says loan statement. Go ahead and click on that, and this is what will appear. So step 1, he says that he already entered the loan, but you just need to make sure that he did it correctly. So we're going to click on Accountant Tools and then Chart of Accounts. Here we are in the sample company. This is the dashboard. And so Accountant Tools is up here at the top. Go ahead and click on that. Under Quick Links, click on Chart of Accounts. Now we need to filter by name. So go ahead and type in loan. So let's do that first. And then you see this one appears. Now you'll notice that it says other current liabilities, and this should be only used for liabilities that are less than 1 year. But as you can see on the statement here, the term 3 years, it is more than a year. Now, if he intends to pay it off quicker, then perhaps you would stay with this account. Otherwise, this would be a long-term liability. You double check with Craig, and he says that he intends to pay it back in 3 years, and he didn't know that it was just considered a long term. So we're just going to go ahead and make the change. First thing is to click the down arrow and select Edit. So here we are right here. Here is the arrow. Go ahead and click on that and then click Edit. Now in the Save Account under, we are going to select long-term liabilities because that's where we want it to live. And then under the tax form section, select Other Long-Term Liabilities. So this is going to be long-term liabilities. The tax section form is other long-term liabilities. If you scroll down, you will see how this will be adjusted on the balance sheet. It lives now under the long-term liabilities. So go ahead and click on the green Save button. And you see that this has appeared. So that is just giving you a warning that you are changing the tax form section. This section is only used if the business owner is connecting their QBO to other Intuit's tax products. And it's only a concern if the taxes have already been filed using this account. Since this is a new account for Craig, though, we know that it's safe to make that change. But if this were a loan that already spanned multiple tax years, you would just want to check with Craig's accountant to determine the best course of action, though they probably would have caught it. So go ahead and click on the green Yes button. And that has now been adjusted. So now we have to see what else Craig has done. So now we're going to go ahead and view the register. So click on the blue View Register. If you get a pop-up here, just go ahead and click out of that. And it seems that he has created a journal entry, which is fine. Business owners will do this from time to time. So let's just see where the money went. We're going to click on Split. And then we are going to click on Edit to look at the details. So here is Edit down here. And here is our journal entry. So the first part of his journal entry is correct. He credited the loan payable, which just means that he increased his amount of liability. The second part, however, is not quite correct. Opening balance equity is used when you or QBO do not know precisely, there we go, where the money went. This is typically seen, for example, when converting from one accounting system to another. You may not convert the details of every transaction in QBO because they were already recorded in that old system. But this is not the case for Craig. This is new. So he took out the loan, so he should know where that money went. Did it go directly towards the payment of the new equipment, or did it go into his bank account? You just need to ask him, and he confirms that he actually deposited it into his checking account. So we really only need to make an adjustment to change the account. In the account field on the second line, we are going to use the drop down to select checking. So this first part here is correct. This one is the one we are going to adjust. Click into it and go ahead and start typing checking. You will go ahead and see that one up here. Go ahead and click on it. And then we need to make a memo about why we are making this change. It's always good to take some internal notes. That way, if you were looking at something, you can see the history of all the transactions. And so seeing what is in the memo is going to be really helpful if you ever need to refer back to it. So we are just going to make this change the deposit account to accurately to reflect the deposit. So change the debit account to accurately reflect the deposit. Deposit. I don't know why that word is always hard for me to spell. Okay, and then you are just going to click on the button that's next to the Save and New button and go ahead and save and close. Down here, the arrow button, go ahead and save and close. Now you are getting this error message. And again, this is just a QBO warning that they're saying that you're changing a transaction that has already been reconciled. Opening balance transactions are always automatically marked as reconciled. But since you have not actually reconciled this account, it's not going to affect you. You will eventually have to reconcile the deposit to the checking account, but that's not what this message is referring to. So just go ahead and click the green Yes button. And the journal entry has been updated and saved. Now for the last part, we just need to make sure that the loan has been set up correctly, so it's time to make the payment. We're going to do the plus new button and select expense. So plus new under vendors, go ahead and select expense. And you will need to, because this is a new vendor, you will need to add the company as a vendor. So go ahead and click on the plus add new button in payee and type out example bank loan. So here is the payee. Go ahead and click into it. You'll see this plus add new button. Go ahead and click that. And for the vendor display name, we said it was example bank loan. Now, it's always good when you are setting up a new vendor or loan that you add in as much information as possible. So the only thing we are going to do for the purposes of this exercise is just attach the statement. So you're going to go ahead and scroll to the notes and attachments, add attachment, and then follow the prompts to add it to the vendor record. So if you scroll down on the record, you'll see all this information that you can fill out. Again, if you can, definitely do it. Today, we're just going to go ahead and add the attachment. And I have here the PDF of the statement. You may need to save it if it opened the way that I have it here in my browser. I had to go ahead and do an extra step of saving it to my folder. You may need to do the same, or you may have downloaded in your folder automatically. So just go ahead and save and add it. And now you can see that it has been added here. Go ahead and click on the green Save button. And you can see that it has now been added. So the last part is just to fill out the rest of this expense transaction. Using the loan statement, we're going to complete the category details grid. The principal will be recorded to the loan payable account. And since the sample company does not have an interest paid account, we're just going to use bank charges account for right now. In a real life scenario, though, you probably want to set up a separate account so that you can record interest charges in one and then any kind of other bank fees that you may have in another. Also note that while the total amount of the expense should be the same each month, there will be different principal and interest split. And that's just because over the course of the loan, the amount of principal versus interest will change. So just make sure that you read the statement carefully. So let's go ahead and do that. Start with this category is the loan payable, which is going to be the principal. So let's go back to the statement. We see that the principal is $85.94. $85.94. Go ahead and tab over. You see that it's been added. And then we are going to be using the bank charges to include the interest. So go ahead and do bank charges. And again, if you are doing this in real life, set up an extra account that's solely for interest. It'll just help keep things separate and very accurate. So the interest here is $56.67. Oops, wrong one. $56.67. Tab over, you will see that QBO has made that calculation, that $142.61 payment. And then we are just going to go ahead and save and close. So hit the green button right there. And that expense has been saved. And that is how you would make a loan payment. And if you have any questions about the QBO Gym, just go ahead and click on the link below in the description. Keep practicing. We're going to be moving through the cardio section with our next exercise, which is all about paying a credit card. And I will see you in that next video.